What's up guys, and welcome back to another video. So in today's video guys, we're gonna go over a very important topic which a lot of traders, especially beginner traders, should really understand and start applying it to their journey, right? So in this video we're gonna go over managing losses and emotion in a losing streak. So we're gonna cover multiple topics. So these are the topics that we're gonna cover: the understanding the losing streak, the emotional impact of losses, risk management during the losing streak, resetting your mindset and building the confidence back, as well the key reminder that losses are obviously going to be lessons, right? On top of that, I'm going to give you guys a risk management plan with a 50% win rate, right? So over here, I'm going to prove to you guys that you do not need a high win rate to win or to be profitable in a long term, right? So I'm going to give you guys the entire breakdown of risk management plan with a 50%, as well giving you guys an example with a probability and as well another relatable example, right? So with that being said, let's get right into this video. Hope you guys enjoy and make sure you guys pay very close attention. So every trader faces a losing streak, right? It's not about avoiding them, it's about how you handle the losing streaks, right? So today I'm going to break down how to control your emotions, protect your capital, and overall come stronger in a red day, right? So I'm gonna give you guys an example with the real life, right? In this month with me, with August has been a very choppy month for me. It's not just because of the strategy, it's not just because the market's doing whatever. It's literally part of the game. There's no excuses to these type of losses, right? You're gonna face these type of losses, and the goal here is the way how you handle these type of losses, right? I had months that I was green the whole entire month. I had a month that I've been red the whole entire month, and to this month over here, the August is a very good example, right? And I like to keep everything full transparency with you guys to show you guys the full journey, how trading should really be, right? It's not all about the wins. Losses are always going to be there as well. Again, the most important part is how you guys are going to handle these losses, right? So going back into the PowerPoint here, understanding the losing streak, right? Losing streak happens to every single trader, no matter their skill levels, right? It's part of the business. It's not a personal failure. Losses do not define your skill. It just really tests your discipline, right? So first you need to understand that obviously losing streaks are normal, right? Even professional trader, even the biggest traders in the world who manage millions of dollars obviously faces them, right? So a losing streak does not mean that you're a bad trader, right? So make sure that you guys keep that in mind. Losing streak does not mean that you guys are a bad trader. It simply means that the market is not aligning with your setup at the time. So multiple things can happen in a losing streak, right? For example, my case for this month, the losing streak that I've been having was due to the fact that market price action is not aligning with the type of setups that I'm looking for, right? It's not because the strategy is bad. It's not because of the time that I'm trading. Simply is because of how market action is ranging, right? So in this point over here, what I do whenever I'm facing these type of consequences here in this point over here, what I like to do, obviously, first thing first, I'm still going to be showing up every single day, no matter what, right? That's going to be my job, is just showing up every single day, executing the same exact way that I execute whenever I'm in a winning streak, right? Now, what I'm just more different here is that obviously I'm going to be more cautious with the markets, right? Obviously, it took me a few losses to really understand what was going on with the markets, right? At the beginning, it was normal, right? But once I started seeing that I was losing already 3 4 trades in a row, I was, obviously we have to take a step back and just reanalyze what is going on in the entire market, what is going on with my psychology, etc. Right? It's just simply just stepping back and just organizing yourself so that the next day you can just come up and do the same exact work, right? So obviously for me, I was going over the entire market action this past couple of weeks, right? If I show you guys some results from the previous one, you guys can see that we've been having very nice wins, right? Bigger wins like 1 to 3 risk to reward, 3% trades win, and then once price action started coming into these exact ranges over here, this is exactly where I started facing these type of losing streak, right? So for this month, I'm break even, right? It's gonna be win days, lost day, win days, lost days. So this month I have been break even. We did end up taking a very nice trade last night during the London session, which did play out for 80 pips, which was over a 101.7 risk to reward. This New York session, price action has been very choppy, right? So to give you guys an example, what price action has been going on the past couple of days or the past couple of weeks for this month, we are respecting every single key levels that I'm looking for, right? So this is where I told you guys, it's not the strategy. So never blame the strategy off your losing streak, right? So over here with gold, which is the period that I trade, we are respecting every single key levels, right? We're meaning that price action is having those nice bounces from these type of zones, right? Now, whenever we get those type of bounces, check this out. Notice how price action just simply comes into a ranges, right? The ranges is where obviously where I like to trade, right? Where I'm simply waiting just for the breakouts. So for example, there is a lot of false breakout towards the upside, a lot of false breakout towards the downside, right? Which obviously is simply the manipulations, right? Now, as trader, right, in my case over here, I pull up to the market with the same exact strategy, right? You guys can see it's just a game of probability, and it's how you manage your risk. So for example, this trade over here was a probability, right? This was a break-even trade. This was a stop loss trade. This was a stop loss trade. Check out this trade. This one was a 3% win. Again, just simply doing the same exact stuff. Looking for the same exact key levels, marking up the same exact zone, and just executing the same exact way. My strategy does not change this at all. Look at this one. This one was a loss. This one over here was a win. Same thing going on. You guys can keep going left. This was a win. Over here, this was a loss. This over here was a loss. This over here was a loss. This over here was a loss. Now, if we take a look at the other side, we can see that we also have wins. This was a win. This was a win. This over here was a loss. This over here was a loss, but this over here was a win, right? This over here was another win. As well, we have more on the other side. This over here was another win, right? So as you guys can see, everything is just a game of probability. There's no such thing that your strategy is the reason why you're losing, right? So you never blame your strategy, never switch your strategy just because you guys are experiencing these type of losses, right? It's simply just the market. The market is not just aligning with the setup at the moment. Your goal here is just to simply pull up every day, mark up exactly what you guys are looking for and just execute the same way. Again, it's a game of probability. Obviously, do not trade if you guys do not see anything. For example, right now, price action is not doing anything, so there's no point of me to be taking a trade. All I'm going to be waiting for is just the breakouts of any of these levels so that I can actually participate with the markets, right? So that's one thing that you guys need to understand and have it as a mindset, right? Again, trading is a game of business, right? It's not a hobby. You guys got to treat it like an actual business. So in this case over here, you want to mark up everything that you guys are looking for, and the next thing you guys want to wait for is the most important part, which is where the money is going to come in, right? Which is being disciplined, being patient with the key levels that you guys are marking up. So for example, for me to make money in this trade, I have to either wait for a break above here, right, and a retest so I can actually enter buy, or break underneath these lows here and a retest so I can enter these type of sells, right? This over here is where I have to connect my mind, right? I don't worry about anything that happened here, but I'm worrying exactly what price action is doing at the current moment. This current moment is where it's going to define if I'm going to make money, if I'm not going to make money, or if I'm going to lose money, right? So this is over here for the first example that we were going over. So you need to, pretty much just face it, right? A losing streak does not mean that you're a bad trader. It simply means that the market is not aligning with your setup. So here's an example. Imagine a casino, right? The house doesn't win every single hand, but over the time, they manage their risk and always stay profitable, right? So as a trader, you must think the same exact way. So as a trader, you're not going to win every single trade. There's no such thing as a 100% win rate, right? You're not going to win every single trade. There can be weeks that you guys are, having 100% win rates, but then there's going to be weeks where you guys have, 60% win rate, 80% win rate, 40% win rate, or just a bad week, right? Every single day or every single day and every single trade that you guys are taking for, right, it's never going to be a 100% win rate, right? The goal here is the way how you guys manage and react towards these type of losses and towards these exact wins, right? So moving forward, we have the emotional impact of losses, right? So obviously losses trigger frustration, fears, and revenge trading, right? All of this is going to be all the negative emotions, right? So emotion and reaction leads to a bigger losses. Recognize emotion before you can control you, right? So losses hurts, right? They make you feel like you need to win it back immediately. And that right there is a trap. Revenge trading, over leveraging, or chasing trade usually makes the streak even worse. So the key here is to reorganize your emotions before they push you into a bad decision, right? So what I mean by this, the key here is to recognize your emotions before they push you into a bad decision. What I mean by this is just simply the impulse decision that you guys are going to be making off the emotions, right? So very simple. Let's say that I took this trade, I end up taking a loss, right? Let's say I lost this trade $500, right? And then my emotions here are like, fuck, I got to make this money back. So what is the next thing I'm going to be doing? Just because I see the market taking me out of stop loss, let's say 3-4 years ago, just because I see that price action have taken me out of stop loss and just pushing the market towards the upside, I probably would have taken a buy position right after taking me out of stop loss just because I see price action going up. Right here, I'm just reacting off in emotions just because I took a loss, meaning that I want to make my money back. I would have taken even a bigger loss. So if I would have taken a buy position here just to react off emotions, I would have gotten stopped out as well, lost another $500. Let's say the market is going down. I'm just simply reacting off what market is doing. If I would have taken a sell over here, notice how the market once again would have taken me out of stop loss. So notice how whenever you guys just react off emotion, just because you see the market pushing up and takes you out of stop loss, you think the market might continue pushing to the upside, right? Or if price action starts pushing towards the downside and starts breaking underneath, you guys think, hey, we're going to be selling the market, so let me just enter this trade. That right there is just, reacting off every single emotion. That's not the goal here. Your goal here is to remove your emotion off trading, right? Emotion should never be something part of trading, because at that point you're just triggering all of these type of negative emotions. The same exact way that I, mentioned over here. You have frustration, you have fear, and you also have revenge trading. Revenge trading is going to be the number one tool that will fuck your account up, right? So if you guys do not, if you guys are just revenge trading, don't expect to be profitable at all, right? So that's one thing to have in mind. If you guys are going to be revenge trading, not taking this serious, do not expect to make money at all with trading, right? So you take 3 red trades in a row. Your brain says just one more trade and I'll make it back. That's right there is emotion and not logic. And that usually leads, right, to one makes. All right, so I said it back. So, and usually that one trade was going to make it losses bigger, right? So your goal here is to obviously have everything organized. Like I told you guys earlier, you guys want to treat this as a business. You guys want to have a plan. You guys want to have a plan how many trades you guys are going to take a day. So for example, my ways to trade, I take 3 trades. Well, I have 2 trade max. If I win 1 trade, that is a minimum of a 1 to 2 risk to reward, or maybe even a 1 to 1.5 plus risk to reward. I will call it a day. If I lose 1 trade, that means that I have 1 more opportunity to take another trade. If I lose 2 trades, then I'm done for the day. There's no point for me to revenge trade, right? Now, here's the secret. I'm going to explain the secret later on with the risk management when I'm breaking it down step by step. But this is the way that I manage the risk, and this is the way how I stay longer in this game and stay profitable, never blown an account after that, right? I'm going to explain to you guys all of that later on, but check this out. Risk management during a losing streak. So first thing first, you got to reduce risk sizes whenever you guys are losing. Stick to the max daily loss limit, protect your capital first, and then profit seconds. So the smartest move during a losing streak is to protect your capital. If you usually risk 1 or 2%, right, you want to cut it to a 1% or even 0.5% until you regain the consistency. Lowering sizes, it keeps you confident, stable, and prevents from emotional blow-ups, right? So for example, if you're down 6% a week, instead of pushing harder, right, instead of, trying to over risk, right, thinking that you guys are going to make it back off 1 trade, you guys got to reduce your risk, right? That way, is even if you lose 3 more trades, your account is still safe and it's still very, very recoverable, right? So risk management during a losing streak has to be one of the most important things, right? So risk management, well, technically everything that we're going to cover, is one of the most important part, right? But risk management, I would say, is the only way that will keep you guys alive with your account, right? So like I said here, reduce your risk sizes whenever you guys are losing. So what I do here is that, okay, I take a trade, my risk is always going to be 1%, right? I usually risk just by number wise, right? So my account, I'm always keeping it at a specific size, and I'm only risking what I'm comfortable to lose, right? So in my case, I'm comfortable to lose $300 per trade. So that means that if I experience the first loss, which is this trade over here, which was a negative $300 loss, right? That means that my next trade, I'm just reducing risk. There's no point of me to over risk it and try to match it to the previous one. I already took my first loss. That means that the second one, my goal here is to protect my capital, just the same way that I have it here. Where is it at? Protect your capital first and then your profit second. So my goal here is not to give another $300 away to the market. My goal here is to simply protect my capital and just simply regain that consistency, right? So if I lost this trade here, lost $300, that means that my next trade here, I'm only going to be risking $150, right? Now again, do the math. If I risk 300 here and I risk 150 here, that means that in total I lose $450 for the day. Now, if I risk 300 here and 300 here and I take another loss, I'm down $600 for the day. So you guys understand it, right? So let's say if I win the 0.5% and it gives me exactly the 1 to 2 to 1 to 3 risk to reward. 1, obviously I will make my loss back. 2, that means that the next trade, I'm going to be able to risk another 1%. Now let's say that I lose this trade 1%, the next trade 0.5%, then the next trade I lose another 0.5%. That means that I'm going to continue risking 0.5% until I'm able to recover the losses, right? And once I'm able to recover the losses, that's exactly where I told you guys that you guys got to rebuild that consistency, right? So check this out. Your account is still safe. Where exactly did I have that? Lowering sizes keep your confidence and stable, and emotional blows up, right? So even if you risk, you got to cut it to 1% or 0.5% until you regain that consistency, right? Now, what I mean by regain that consistency is simply winning the games back to back to back, right? Very simple. So again, Your goal is not here just because you lost this trade. Just because you lost this trade doesn't mean that you need to over risk more, right? Doesn't mean that you need to continue risking even higher to make the money back even faster, right? That right there is just nonsense. You're not really trading. You're just trading. You're not trading with logic. You're just trading simply with emotions, right? That is something that you guys definitely do not want to do. The goal here, again, I'm gonna repeat this over and over again. Protect your capital first. Your capital is what's going to give you guys access to the markets. If you don't have capital, you guys don't have access to the markets, right? The second thing is the second thing that you guys want to do is profits are always going to come second. So again, protect what's going to give you guys the profits, and then after that, you guys are going to protect the profit next. So that's the second one. Now resetting your mindset. So step away from the charts for a day. So let's say if you guys take two losses, right? Let's say you guys take the two losses, you guys you know do your moves. You guys want to step away from the markets, right? There's no point of you guys to be looking at the market, hoping, hey, let's see if the market goes this way. Let me enter another trade. You guys want to step away from the markets, right? Again, everything with trading has to do a lot with psychology, right? You're handling with your losses, right? So there's a video that I made. Trading is not for the weak if you guys cannot handle losses or you guys cannot handle emotions, right? So again, if you guys lost a trade, here's the thing. Reset your mindset. By resetting your mindset, you're simply going to step away from the charts for a day. Your mind is off the chart. Review your trade without emotions. Focus on the process and not the outcome. So sometimes the best trade is always going to be the no trade, right? So you take a break, reset, and come back clear-headed, right? Review your trade like a coach watching a game footage, right? Was it a bad setup or just a market condition? Focus on what you can control, execution, and discipline, right? So even professional athlete watches replays to improve, not to get angry, and traders should always do the same exact way, right? So this is where I'd like to mention to you guys that, whenever you guys journal your trade, whenever you guys review your trade, it's very, very important for you guys to really understand what exactly you guys are doing for, right? So I'm gonna give you guys an example. For me, when I was going over these type of setups over here, I came to realize that obviously it wasn't the way that I would execute in the markets, right? It was the way that the market, how price action overall was in the condition, right? So for example, look at this over here. I got every single thing that I waited for, but just notice notice the entire price action. The entire price action going on over here is simply going to be very, very choppy market condition, right? There's no clear direction towards the upside. There's no clear direction towards the downside. So in this case over here, my lesson was that obviously I cannot trade inside of ranges, right? Over here, I'm simply just going to be waiting for price action to start giving me everything, which would be the 100% confluence to start doing what I need to do, right? So this is one of the lessons. Do not trade inside of a range. Wait for price action to break out. Over here, all of these losses over here could have simply been avoided, and I could have just simply stepped out of the market and just avoid all of these type of losses. But again, losses, like I told you guys, it's not going to tell you guys if you guys are bad traders. A losses is always going to be something that you guys are going to learn from. So for example, I learned my lessons over here, stepped out of the market, waited for the next day, and then caught a nice trade. Stepped out of the market, waited for the next trade, and I got a nice trade, right? So you simply notice exactly what you guys are doing, right? So if you guys do not journal your trade, you guys are basically trading what you guys see and not what you guys feel, right? What you guys feel and not what you guys see, right? So you guys are just making up stuff. Journaling, understanding what type of setups you guys are trading, even if it's a win, you guys really understand what type of setups to avoid and what type of setups to start taking, right? So that's gonna be the first one, right? Even the traders, you guys gotta go back and review your trade. Resetting your mindset is very important because if you guys can pull up the next day with the same exact mindset, trying to force something, you guys are gonna keep fucking up over and over again. So the second one here, or the third one here, is building your confidence back. So start with a high probability setups only. So this is very important. Start with a high probability setups only, right? This is something that I'm starting doing right now due to the fact that I'm literally just seeing entire price action just being very, very choppy. So this one over here, you only want to focus on the high probability setups. I'm going to give you guys a very quick example of how I technically trade. So in my setups, I'm over looking for a higher probability highs and a high probability lows, right? So check this out. High probability highs and a high probability lows, which is going to be something like this. As well, I'm looking at medium risk and medium risk highs and medium risk lows. Now, what I mean by medium risk high and medium risk low. Medium risk high and medium risk low, I'm technically trading in the middle of these entire highs and these entire lows right over here. So let me ask you guys a very basic logic question. If price action breaks out of the major highs and retests it over here, this is going to give us a clear direction of a higher time frame perspective, right? Now, if we're going to trade it off a medium structure, is not going to be a full, it's not going to give us the full idea where price action can be possibly heading. So this over here will be medium risk. It will give you guys a high probability setup as well, like a very good risk to reward if you guys get exactly what you guys are waiting for. But obviously the higher probability is going to be higher chances of you guys winning than you guys winning the medium risk, right? So if we go back over here, start trading with a higher probability setup. So let's say that you guys lost 2 trades yesterday, and then you guys pull up the next day and you guys pretty much see the market action doing something like this. The best bet here is not to trade no longer inside the ranges. Why? Because inside the ranges, which is going to be medium risk, is going to be a high risk trade, which can give you guys a good setup, but then there's going to be a chances of price action going to be exiting the other side, right? So the goal here is to avoid the high risk trades and start focusing on the higher probability trades, even if it takes time. For example, I'm over here still waiting for my trade, which is this over here is going to be a higher probability setup. But as of right now, notice how price action is just stuck between the ranges, right? So there's nothing that I can do over here. So that's going to be the first one, which is, obviously start with a high probability setup only. Reduce your trading frequency, right? So what does that mean? Reduce your trading. That means that you guys need to step out of the market, not always be in the market and try to force something or try to create something when there's nothing, right? So you're gonna have to reduce your time with trading. You guys want to step back and just obviously let the market do its thing, so you guys can obviously wait for what you guys are waiting for. So for example, another good example over here is that I'm reducing my time. I'm not over here sitting at the market waiting to see when price action is going to break towards the upside or towards the downside. You set up your levels and you set up your alarms and you just step out of the market. Do not try to create something when there's nothing in there, right? Now, stack the small wins to rebuild those confidence, right? So once you're back on the charts, right, focus only on your best setups. Don't try to trade every single move. Even 1 or 2 clean setups can rebuild your confidence, right? Trading is just about stacking probabilities and not chasing every single candle, right? So right there, it already said everything that you guys need to understand. Don't try to trade every single move. So I'm gonna give you guys a good example. Notice this levels over here. We have psychology levels over here, right? We have the first high, we have the first low. What is price action doing over here? We're simply just ranging up and down, right? That's exactly what price action is doing right now. Why would I want to trade this entire ranges over here? This over here is you're trading technically, based off emotion of what you guys are seeing. You guys are not trading off logics, right? The goal here is for you guys to trade the higher probability. So what will be the higher probability in this case over here? Remember, your goal as a trader is not to trade inside of ranges, right? Your goal as a trader is to trade the trend of the markets, right? The trend is always going to be your friend, right? So there's no point. This is exactly what you guys want to be trading, not something that market is doing this, which is just simply moving up and down, right? This over here is not logic. This is just, nonsense. This over here is the logic. This is exactly what you guys want to be trading, right? So again, if we're going back over here, don't try to trade every single move. Once you guys start building that confidence back, is simply, just going to the market with the proper risk. Like I told you guys want to reduce your risk first and then just looking for the higher probability. Once you guys start making that first win, that means that the next win, you guys are just, aware of what pretty much you guys went through. So that the next win, which is going to be the second win, you guys already know exactly what to look for. It can either be a no trade, it can either be a break-even trade, but you guys are waiting for the higher probability setups, right? And that's the only thing that matters. So in this point over here is not trading every single candle. Again, we're going back. Not every single candle. You guys want to review your trade. You guys want to, this over here, you guys want to stack with high probability setups only, and then you guys want to stack your wins back, right? Again, small wins, meaning that you guys are risking less than what you guys usually risk. So for example, in my case, I risk $300, which is going to be my 1%. But if I'm in a losing streak and I'm losing trade, I'm only going to be risking $150. So check this out. If I start winning 2-3 more trades, this is exactly what we're going to go over in the risk management, which is just the probabilities, right? Which is very cool for you guys to understand, right? Which is exactly which it can prove you guys that you guys do not need a high win rate to be, a good trader. Even a 50%, 30%, 40% win rate can give you guys a higher probability than any other traders that are winning, 100% win rates, right? Which is something very simple, cool math. We'll go over in a bit, but something that you guys need to do as well. Now, if you take 10 trades, right, you might win 6. But if you only take your 8+ setups, maybe you win 8 out of 10. But remember, quality over the quantity, right? So this is something that we're gonna go over later on, which is how many trades you guys can take. You guys can win 6 trades. You guys can lose. You guys can win 5 trades, lose 7 trades, and you guys can still end out profitable at the end of the day. So again, check this out. Key reminder, losses are just tuitions, right? Losses are payment for experiences, right? Every trader pay tuition to the markets, right? Success comes from learning and not avoiding the losses, right? So keep this in mind. Success only comes from learning and not avoiding the losses, right? So these are the type of losses that you guys need to go over the time, not just avoid them, not just you lose a trade and just step out of the market and do whatever you guys want, right? No, you guys want to take these losses, you guys want to give it time, you want to go back later on to the market and just review why did you guys take this trade. Hey, I took this trade because price action reacted off this, reacted off this key level over here. I took this trade because price action broke underneath these entire lows. Those are the type of notes that you guys want to be writing down into your journal, into your trading journal, and just take a screenshot. Take the screenshot of this setup, just study it over and over again, right, until you guys understand. These are the type of setup that I do not want to take. Now you guys go into one of your win trades. You guys are gonna come over here. Hey, I took this setup over here because hey, one over here, price action rejected this. Two, price action broke underneath this level. Three, we got the retest of these levels. Those are the little notes that you guys want to write down because again, you guys want to understand why did you guys win this trade and why did you guys lose this trade, right? Again, every single experience that you guys are gonna have in trading is just it's simply experience, and you guys just want to do this over and over again. Again, at the end of the day, the market is not going anywhere, so you guys are able to make so many more mistakes, and you guys are gonna be learning over the time. So think your losses as a tuition fee for trading school. No one becomes a professional without paying for education, and in trading the education comes from the red trades, right? So here's the education, the red days. The difference is that pro traders, smart trader learn from them, and the reckless traders, right, is just gonna repeat them. So it's like I told you guys want to come back and repeat this. You guys want to treat this like an actual business, not just a hobby, right? You guys don't want to come here, take a trade, and then just walk away. No, you guys really want to understand, really want to go in depth what you guys are doing, right? So remember, at the end of the day, right, no patience equal no profits. Protect your mindset and then protect your capitals. Remember, a losing streak does not end your career, but losing discipline can. So manage your risk, control your motion, and trade only when the conditions are right. And that's exactly how you guys are going to survive in this game. So we went over a few topics over, managing your losses and experiencing the emotions in losing streaks. Now we're going to move forward into this one, which is simply the risk management plan with a 50% win rate example. So check this out. We're going to make this very quick. This one is very interesting. So let's use the color blue today. Risk management plan with a 50% win rate example. So risk per trade. Always risk a fixed percentage of your account per trade. So for example, if you guys risk 1% on a $10,000 account, your risk is simply going to be $100, right? Now me personally, what I do, I risk exactly the money that I'm able to risk. I really don't focus on the 1%, so I'm not going to, this is something that you guys need to understand as well. You're obviously risking the 1%. Over the time, whenever you guys build up those type of experience, you guys will really understand what I'm saying. But me personally, I'm always risking what I'm comfortable to lose for, right? So for example, my account balance, I'm able to risk $300, which I'm completely fine risking $300. Now, if I'm losing the trade, I'm just going to be lowering it down $150, right? Very simple. So that means that no matter the setup, you never lose more than $100. So if you guys risk 1% in a $10,000 account, which is $100, no matter the setup, you're always going to be losing $100. Now, let's say obviously that you're losing a trade. You guys want to lower down the risk to 0.5%, which at the end of the day is going to be over $50, right? So risk to reward. You always want to aim for a minimum of a 1 to 2 risk to reward. So that means that if you're risking $100, that means that your reward is going to be $200. So why? Even with only a 50% win rate, you will still end up profitable. So again, you always want to aim a 1 to 2 point risk to reward. Never going to be aiming for a 1 to 1 risk to reward. And I'm going to give you guys the example why. You're risking $100 to make another $100 back. Let's say the next trade you lose another $100. In the next trade you lose another $100. But the next trade you guys win another $100. And the next trade you win another $100. Do the math over here. Where is the profitability of that? At the end of the day, you're gonna be break even. You're never gonna make money. You're never gonna lose money. You're simply just gonna be break even. Now, if you look for a 1 to 2, let's say you guys win, or let me just delete all of this so I can make it more space. Or fuck, let's just do it this way. Let's say you lost the first trade, $100, you lost it. The next trade you won $200, right? That means that you're back up to $100 in profit. The next trade, you lose another $100, you're back at break even. But the next trade you win a 200 bucks, you're now profited $200. The next trade you win another $200, you're up $400. The next trade you win another 200 bucks, you're up over $600. So 246, you're up 600 bucks. The next trade you lose 100 bucks. Cool, you're still up 500 bucks. The next trade you lose another $100, you're up 400 bucks, but the next trade you win another 200 bucks. You're back at $600 in profit, and then it just continues compounding over and over again. So this over here will give you guys a higher probability. Risking a 101 will never give you guys a higher probability, right? So check this out. Here's the outcome. So let's calculate with 10 trades at a 50% win rate. So this over here is going to be probability math. So 5 wins with a 1 to 2 risk to reward. So you simply do the 2, 4, 6, 8, 10. That's already a 1 to 10 are profits. 5 losses. So this over here is if you guys take 10 trades, which is going to be 50%, right? So 5 losses over here, you're risking a 1%, which is going to be $100, right? If you lose 5 trade, you lose 5 R, which is simply going to be $500. So what is the net profit at the end of the day? The net profit after winning 5 trades and losing 5 trades, you guys are going to end up with a 1 to 5 risk to reward. So what is a 1 to 5 risk to reward? With a $10,000 account in this case over here, you guys are going to be profitable with a $500 in profit. And this is just simply a probability math, just risking 1% off a 50% win rate. You're still going to be profitable. You're still going to end up the day with $500 in profit. So here's an example. With a $10,000 account, your risk per trade is 1%, $100. Your win is 2%, which is 200 bucks. Over 10 trades, you win 50% win rate. So over 10 trades, your win profit is going to be $1,000. Your losses are going to be $500. What is your net profit at the end of the day? $500, which is going to be a 5% win rate. Or not 5% win rate, 5% profit. So this shows over here why discipline in risk to reward matters more than a win rate. So keep this in mind. Win rate does not really matter in trading. If you guys start focusing more on risk to reward, then trying to be a perfect trader, trying to get 100% win rate in every single trade, you guys will be profitable longer than trying to, chase that dream of trying to be 100% right every single time. So always be disciplined into the risk to reward, no matter what is the win rate. You guys can have even a lower win rate, 30% win rate, 20% win rate, still be profitable at the end of the day if you guys focus on the risk management. Risk management is what's going to save you guys to win. So for example, here's a very good example. We're going to go back from these type of trades over here. And we're going to do simple math here. So let me just pull out a calculator. And we're going to do very simple math. This trade over here, this was a break-even trade, so I didn't make any money. But this trade over here, I lost a negative 1%. So I'm already down, let's say, 300 bucks. Right, I'm down 300 bucks in this trade over here. This next trade I lost a $150. So I'm already down $450 for the day. But now check out this trade over here. I made 3%. So I made 300. I lost 300 here. I lost 150 here. So I'm already down $450. Now, this trade over here, I made $900. So now check this out. Focusing on just the risk to reward. This over here were 2 bad losses, right, which was simply a 1% loss. And this over here was a big one, which was a 3% win. So like I told you guys, do not focus on the win rate, focus on the risk to reward. The risk to reward is what's going to save you guys. This was a 1% loss. This was a negative 0.5% loss. And this over here was a 3% loss. So I'm down 400 bucks. At the end of the day, I end up closing out the profit in total, $500 after taking 2 losses back to back, right? So again, this is why risk management is very important. Once you understand the first losses, that means that the next loss over here, you guys do not want to make the same mistakes. You guys do not want to go and over leverage, right? You guys do not want to go and just risk the same amount. You guys want to reduce your risk and slowly start building the confidence back to back. The next trade I come over here, I made $900. At the end of the day, I did recover from this loss over here, and I also recovered from this loss over here. 2 losses back to back, 450, closing out 900. At the end of the day, I end up making over $500 in profit, right? So again, never increase the risk after a losses. This right here is going to be cost chasing, right? Don't change your risk to reward mid trade. Stay consistent, 1% risk, 2% targets, right? So focus on execution and not the outcome of one of the trade. So here's a relatable example. Imagine you guys are flipping a coin, right? So the heads, you win a $200. A tail, you lose a $100. even with a 50% chances, if you keep flipping with, here's the key word, discipline, you'll always come out of the head game long term. So you will always be profitable long term. So the whole idea here with this video that I made for you guys, the key word that I want you guys to understand here is the discipline. Discipline, even if you guys are losing back to back to back to back, doesn't matter. Discipline, simply showing up every single day, is going to recover your guys' losses over the time. Now, how you guys are going to recover your losses over the time? Obviously, everything that we went over here is exactly what you guys need to apply. So literally everything over here, building your confidence, resetting your mindset, the risk management after losing streak, understanding the losing streak, impact losses, everything that we went over today, if you guys start applying that and literally just showing up every single day with discipline, that's exactly how you guys will master, accepting the losses the same exact way that you guys accept the win. So with that being said, guys, that's pretty much it for this video. I'm going to be leaving all of this PDF down below in the link. So if you guys want access to this, you guys can either just comment there, or you guys can just simply click on the link. I'm also going to be posting these type of PDF inside the Telegram channel, so you guys will have access to this regardless. So hope you guys enjoy this video, and I'll see you guys in the next one.